Hey, good morning, everyone. It's Monday, the 18th of May, 2015. Welcome all. On the economic calendar this week, Tuesday, Australia releases their uh, releases their monetary policy meeting minutes from the last monetary policy meeting. Uh, from New Zealand, we have the quarterly inflation expectations, and from the UK, we have CPI data. On Wednesday, some certain events to look out for. The Bank of England releases their bank rate voting pattern. That should be a interesting one, considering that uh, it would appear, for all intents and purposes, that Mark Carney and his team at the Bank of England have started raising expectations once more about an interest rate rise this year. But the first indication of that would be actually a change in the voting pattern by the members of the Monetary Policy Committee, and therefore it's worth keeping an eye on that one. So if that kind of goes from 9-0 to 8-1 or 8-2, remember it needs to make 5-4 in favor in order for there to be a rate rise. So we need to start seeing some change in that voting pattern, and that is what would actually really firm the expectation that that is something which is on the cards or on the horizon at some point this year. One of the things to note from his statement last week as well was that it was a similar expression to the one which had been made by the Fed last year. So he said, "Yeah, we are going to see raises. We are going to see a rise in the interest rate, but it won't be at the previous historical. It won't be as much as that." So what he's talking about is a very small rate rise, maybe 25 basis points, and maybe that happens once or twice. And that's what he appears to be talking about. So, don't expect things to go back to 3%, to 4%, or anything, anything like that. It'll be a very small, gradual uh, raise in the interest rate levels. So it's worth keeping an eye on that one. Also on Wednesday evening, we have the FOMC meeting minutes. Not the important one. The market is generally focused on the June meeting. That's the one which is going to be with the press conference, and there seems to be still a lot of expectations that the Fed will raise rates at the June meeting, and my personal expectation is to have them pull out of that at some point prior to it, or to give some kind of indication. Now it's not going to happen June. We're going to wait until the end of the year, and then it might not happen at the end of the year. We're going to wait until 2017 because of the global risks which are associated with raising the interest rates or global economic. They'll come up with some reason or another, but they'll need to announce that uh, at some point if that is the track they're going to take. Otherwise, the general expectation, as far as the financial press are concerned anyway, is that it's going to be all about the June meeting. Nevertheless, and the minutes for this month will be released on Wednesday evening. We don't expect it to be the most volatile affair unless they set us up for failure. Thursday's French and German PMIs, and the week wraps up with some speaking engagements from the central bankers. So Draghi, Carney, and Kuroda from the Bank of Japan, from a panel discussion in Portugal. They're unlikely to discuss anything policy related to an individual central bank, but nevertheless, just in case they end up letting something slip, it may be worth keeping an eye on that one. Although I wouldn't be listening in, it's probably easier just to follow some of the financial journalists on Twitter or something, and you'll have pretty good summary of what they're going to be talking about. So that's the calendar done. It is actually if we take Wednesday out of the equation, it's actually low key affair. So Wednesday, I think, is going to be the key day with that Bank of England rate voting pattern and the FOMC meeting minutes. It'll be the big one. And tomorrow, intraday sparks, particularly around the UK CPI figures. All right, let's turn our attention towards the charts. I guess that's why you're here, really, rather than to hear me talk about what's on the economic calendar this week. So first up this morning is the Euro USD, and a little bit of a general perspective this morning, more of a general perspective this morning, but we do have some hard technical levels that we are interested in initiating trades at also, and some longer term outlooks, but it's just a handful of charts that I'm looking at this morning, more pound centric than anything else, but we'll come to that in due course. We're going to begin with the Euro USD. Last week, we were talking about the potential for the euro to move higher, and I mentioned 112 as the key flip area. So, we're sellers below, we're buyers above. We also noted, and it's visible on the H4 and as well on the daily time frame, that there's a long-term trend wall on this instrument, and so we're just connecting the highs of that 3,500 pip fall that we saw from the in fact it's almost been a year. It's probably been just over a year now it's taken for the price to kind of make that fall, and it does appear as though the price is being attracted to that particular trend wall. Now, one of the issues that I wanted to highlight was that quite often when you have a trend wall which is marked like that, the price is going to be attracted to it, but just because the wall is appearing to be higher than where the price is now, it doesn't necessarily mean that the price is going to be moving higher. What you have to really be doing is also be factoring in the time equation on your chart. And so what I'd be considering is that there is possibility that she moves sideways towards that wall, and then it kind of becomes decision time about whether you're going to get that hold or whether you're going to get a breach and break, right? So still eyes very much on Euro USD, and I'm still preferring the short side on the instrument. I'm looking for a cap on Euro USD, and it's just a question of whether that is something which is going to happen here ahead of the 15 price handle. That's what I'm trying to determine right now. So I'm still giving preference to those short plays and looking for the short setups. Right now, as far as the walls are concerned, it's the same wall that I'm looking at. So any subsequent strike on the underside, we've had quite a sharp reaction. So this is connected from the shoulders here on the left-hand side. We had quite a sharp reaction there, just shy a couple of times. But anytime she goes and strikes the underside of that wall, I think it will be giving a decent reaction, and so I'll look to short the underside of that, looking for a support resistance. It's just a technical play, and so I'll continue playing reactions on that wall until either she gives a more significant swing off of it, or the wall fails and the price ends up breaking through it. So the general expectation right now is a bit of a sideways move. I don't want to be fighting the flow on the instrument randomly. The month is up now, and it's up from the 112 price handle. So either I short the underside of that wall, or she has to fall below the 112 price handle. So we have our monthly open level at the 112. She has to fall below that, and if I'm getting a H1, H4 bar closing below the 112 price handle, I can look to chase the momentum to the downside. and knowing that the direction of the month is on my team at that particular moment, or at that particular point in time. So that's the Euro USD covered. We expect some sideways move. She's being attracted towards that trend wall, and although she might need to break, if she's going to hit that this week, she probably needs to break higher to do it. But if we see her going flat, and that's my general kind of expectation, that should go flat and make a sideways move towards it. It'll be quite interesting to see whether we get that breach and break or whether we get the hold at that level. The general expectation, the default position, would actually be for a hold, but I continue to look for shorting opportunities on the instrument itself. All right, GBP USD. Again, it's a fairly interesting one. Very, very strong rallies over the last 3 weeks. You've got 3 bullish candles on the weekly time frame. So if we're just taking a look at that, just moving this out of the way. In fact, 3, 1, 2, 3, 4, so pretty much the whole month. Very strong rally on the instrument, and so it wouldn't be unusual at this stage to see a little bit more significant corrective action. There's some gap that she's left here, and that's really annoying. When you have gaps like that and they've not been filled, and you start thinking, is that gap going to become a target for GBP USD, right? But my main concern with GBP USD is just flow, right? That's my main concern right now. And as far as the near-term determining factor for that is concerned, it's a block between 57. I'm just going to drop down to a 15-minute time frame here. I would say it's this block between 57 and 57.30. All right, and what I'd be saying is that so long as the price is remaining below this block, then technically, not technically, but from a flow perspective, you'd say, well, we've got a bearish week going on here, right? It's a bearish week, and therefore, the sensible course would be actually to be looking for the instrument to be making a move lower. But if you're looking for that momentum break and you're still looking for those higher highs, even at this stage on GBP USD, despite the fact that she's rallied 1,400, 1,500 odd pips from her lows 3 or 4 weeks ago, right? If you're still looking for that, what would happen is that you would need to see a break above that block there. So that's, so that would need to be actually a clean break through the 57.30, then a pullback into that block, and you'd expect the area to act as support. And at that point, you'd get your continuation trade higher on this instrument. So it's flow perspective on GBP USD. In the near term, it's about that 57, 57.30 price handle. So long as the price is remaining below that, I'm happy. I'm happy, kind of considering the short option, and I'm not against that at all. There is that gap to play for to the downside, and it is possible that that would end up attracting the price. But a breach of that block, a break higher, I don't want to be fighting the direction of the weekly flow on this particular instrument. She has shown a lot of strength, and so if she's breaking back to trend, and that's how I would be viewing that block, a move above it is a break, is a break back to trend. You'd want to not be involved in the shorts at that time, and if you are short, you're going to be thinking about flipping that position over and looking for the higher highs until it's clear that those higher highs are not going to be made, and the flow returns in favor of those short plays once again, right? So 57, 57.30, that is the block of interest on this particular instrument, and that is the area that I'd be keeping an ion for GBP USD. It's shorts below and it's longs above. The cable crosses are a lot more interesting. We have a lot harder. We have a lot more harder levels on the cable crosses. So first up is the GBP JPY, and it's a clean resistance wall on GBP JPY, and in all likelihood, we think that she may be topping off here. And if she is topping off here, uh, you can be shorting the instrument anywhere between where she is at market and the wall, although a preference would be actually for another rally and failure at the wall, and you get a H1 bearish bar, H4 bearish bar off of it. It'll become a fairly good short trigger. It doesn't even have to happen here. What's been proven here is that that wall matters, right? And because the wall matters, any subsequent strike, even if it's after some duration, you would expect that wall to hold, and any bearish bar off of it would become a trigger to the downside on GBP JPY. Because it's been proven as resistance, you can also use that for your continuation trade. So if it happens that the price goes and hits that and then ends up breaking through it, any pullback to that wall, you'd expect it to become support, and then you would look for a continuation in the momentum higher. So a very clean support resistance wall on GBP JPY. It's the determining factor for the long short bias on the instrument. Technical shorts below it, a breach above that wall, and the instrument becomes long, and you can look for a significant follow through to the upside at that stage. So in the near term, we're interested in shorts. I'll be looking to sell rallies up towards that wall given the opportunity, but any break through it, and we will be changing our perspective. We'll start looking for those longs, and it's just your H1, H4 bar close through it. You're good to chase that. If she breaks through 100 pips odd, 70 to 100 pips or something like that, that's a significant enough break. At that stage, any kind of pullback, and you're going to look for that wall to turn support, and then you're going to look for a further swing or follow through to the upside on GBP JPY. So quite a clean level to be playing on the instrument there. Pound Canadian, we have more of a kind of intraday support resistance wall on the Pound Canadian. So it's the upper one which I'm interested in, right? So it's this one. All right, that's the level. And again, it's one of those where, you know, if she's going to rally and she goes and hits that wall, it's one of those where you'd expect a sharp reaction. So getting into that trade shouldn't necessarily cost you more than 25 pips as far as a stop is concerned, even on the Pan Canadian, despite the fact that she can be one of those more volatile crosses, right? So 25, I'm going to extend that a little bit now. 25 to 30 odd pips is good enough to be getting involved in a short on the Pan Canadian, and you just want to mark that wall. It's been taken from a little bit of an awkward place, right? But I'm on the 30-minute time frame here, and we're looking at that candle low there and those highs there, and it was a very sharp reaction the last time, so no reason not to believe that we'd get an equally sharp reaction the next time that wall gets hit. It's going to be a little bit of a waiting game this week. It looks like we're quite far off from a lot of the levels that I have marked, but nevertheless, that should provide a fairly decent reaction. We have a similar structure on the Euro Canadian. I'm on the 5-minute time frame here now on the Euro Canadian, but quite a clean support resistance wall. There it is, and so I wouldn't be surprised if actually we saw something like this happen, and she may make a fresh low before she actually does that, but I would expect that wall to attract the price, and for the price to rally up to it. May well be worth looking for that bullish break and to actually take the long headed towards the wall, and then once she makes that wall, there is going to be an opportunity to play a sharp short off of it, and I'll be looking for that trading opportunity on an intraday basis too. All right, so that's the bulk of what I'm looking at covered. From a longer term perspective, I still have eyes very much on the Kiwi and the Kiwi crosses. I maintain a short bias on the instrument. I don't think that that is a double bottom. I think it's a harmonic bottom, and so I will be looking for a breach of that. As long as the flow remains negative on the instrument, we have the month coming in at 76.30, and we have our quarterly here, which is coming in at 74.70. All right, so so long as the price is remaining below the quarterly, so long as the price is remaining actually below the monthly, we have a bearish month on our hands, and I'm still quite happy looking for opportunities to be shorting the instrument. I think that what's actually going on here, all right, is a much bigger version of what happened here. All right, so you see this kind of harmonic breakdown. Ordinarily, it would look something like this. You know, it would push a lot higher before it ends up breaking down. But that is what I'm imagining is actually going on here inside of this flat wave structure. Remember, the Reserve Bank of New Zealand stated price objective for the Kiwi dollar is 0.65. On the fundamental side, they had that financial stability report from last week or the week before. I think it was last week. But what they said in that report was quite interesting. One of the things that they did in that report was quite interesting, which is that they've raised the deposit requirement for home buyers in Auckland, the capital, which is where they have the biggest housing bubble effectively in the country. So they've said, right, before you might have needed a 5% deposit or a 10% deposit or something, but you're going to need a 30 or 40% deposit now in order to take out a mortgage. And what that does is it takes away the need for them to raise interest rates in order to control the housing market or to take steam out of the housing market. They found an alternative. Way to do that, right? And as well, there seems to be some talk on the horizon as well that there might be another rate cut coming out of the Reserve Bank of New Zealand. So we maintain our short stance on this instrument. I know I've been doing this pretty much for 2 years now, right? Short the Kiwi, but she remains a short. And so anytime she rallies, we just need to be looking for opportunities to be shorting it. The cutoff point is the 78 price handle. It's the yearly open. So, as long as the year is bearish, we're good to be looking for shorts on the instrument. And I continue to believe that the rallies will get sold into. It's just a case of, when she does start rallying, just wait for that H4 bearish bar. And once you've got that H4 bearish bar, you're ready and fine. And you just have to match it to any kind of technical on the chart. Take the trade. We really are going to come back to this in maybe a year's time, and we're going to see her thousands of pips lower than where she is right now. And despite the fact that she's down, more than 1,000 pips, right? So 1,500 odd pips or whatever. In fact, more than that. So what are we talking about? She's down 1,500 odd pips from the highs there. I think that this is just the beginning, I guess, and she does have actually a lot further to go. I'm not going to say I'll eat my hat if she does it, but as far as the price action is concerned, I think there's quite a clear reading on that. And so, if you're buying, it's speculative. But if you're selling, I think that's based upon what's visible on the chart. And so selling would remain the sensible course of action until price says otherwise. All right. So stay on the short side, NZD USD. The other Kiwi cross, which is of interest, is NZD JPY. She makes a lot more sense on the daily time frame than she does on any other time frame, but I'm still maintaining that what we have here at the 94 handle is a double top, and so she broke down, she pulled back, she went flat at that area. We're going to get quite a strong break to the downside, and I have a whole bunch of walls that I've got marked or support areas that I'd like to see her breach, right? But again, it's the same thing. If she rallies, I'd be looking to short it, and at this moment in time, what we're really considering is that that is the wave high there. We don't expect the price to breach that level anytime soon, and so long as that high is holding, and it does look like she's done that rounding now. We talked about this rounding a few weeks ago here. Any rallies they can continue to be sold into, and we may well see a move something like this as she breaks down, and then we might get that boom as well, where she heads into the 70s and then into the lower 70s. So that's my expectation for NZD-JPY. You heard it here first. You've been hearing it for about 2 years. So I reckon it's about time now that it happened. All right. But stay short NZD-USD. Keep selling rallies NZD-JPY. Just mind the transaction cost on this. But as far as the technicals are concerned, that to me is a double top. And the Kiwi is the only one where I'm keeping that kind of long-term perspective, right? So, we're looking for significant further weakness in the Kiwi, and if you can short and hold, and if you have the patience to do that, I think there are a lot of pips to be. There are a lot of pips that could be acquired here, a lot of pips that could be picked up here on this particular instrument. Okay, folks, that's your lot. That's everything that I wanted to cover with you guys. I hope you've enjoyed the presentation. Don't forget to check out my website. It's wmdforex.com. I publish analysis on there every week. You're welcome to become subscribers to my trade service. I've also produced some online courses in mastering the art of trading price action and charting correctly. So also take a look at that. And I'll see you here again in a few weeks' time. Until then, trade safely, look after yourselves, and look after each other. And we'll meet again in a few weeks' time. So thanks very much. Cheers. Bye.